On today's episode, we are going to take a quick look at a new company entering the metaverse, and this one is pretty interesting, and I believe there is some strength to it. Next, we're going to take a quick look at some semiconductor news. Obviously, this can't be an episode without talking about the semiconductor industry, and more importantly, we're going to see if Intel might be the semiconductor stock to own in 2022. There are a lot of great news coming out for this company, so let's find out. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. Alright, so first let's start off with the metaverse news. Spotify is entering the metaverse via Roblox. Spotify has created an experience on Roblox called Spotify Island, and it did go active on May 3rd of 2022. And as I am recording, it has already seen over 100,000 visits, and at the moment over 8,000 people are playing active. I want to say this is probably one of my favorite Roblox experience being built by an outside company, and let me explain why. So we've seen a lot of other companies kind of create experiences here on Roblox, but most of them are just a one-time thing. Hey, you come to a Roblox between days of this and this, and you're going to get a free item. But that's not what Spotify is doing. Spotify is kind of creating a world where every week or every so often they either have new artists come, maybe even do a concert. They have new artists kind of announce or create stuff based on a new album, based on a new single, and the person in the Roblox universe can either purchase some of these digital goods. So this is more of like a reoccurring experience that I believe can drive even more users to Spotify, which is great advertisement, and also more users to Roblox. Spotify did recently release their earnings, and we can see total monthly active users are up quarter over quarter, year over year. Premium subscribers also up quarter over quarter, year over year, and ad-supported monthly active users are also up quarter over quarter and year over year. Unfortunately, their financials for ad-supported is taking a hit quarter over quarter, but it is up year over year. All right, so now the second company we're going to take a quick look at is Intel Corporation. This is probably one of the least popular semiconductor companies out there, and I believe things might be starting to turn around. I do believe there's still time to wait before kind of entering into Intel, but more positive news are coming out for this company. The stock right now is up 0.53 as I am recording, but we can see from its 52-week high, the stock is down over 22%. Some recent good news for Intel: one of their processors is currently Newegg's best-selling CPU. And I kind of decided to check on myself, and here I am on Newegg, and the number one component is the Intel i5-12600K, and this is selling for $258. And look, number 4 is actually one of their power chips, the 12900. And this is interesting. I don't think we've seen other competitors being in the number 1 list for some time, so it's pretty impressive that Intel with their new 12th generation is getting some great traction. I want to thank The Motley Fool for sponsoring this video, and keep listening for this great offer we have for the community. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you a discount for one of my favorite services The Fool offers, The Motley Fool Stock Advisor. Go to fool.com/Jose to sign up and get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor has been a market-beating service, so what are you waiting for? Thanks again for The Motley Fool. Now on to today's points. Some other news about Intel. In the most recent interview with CNBC, the CEO of Intel mentioned that he believes the semiconductor shortage is going to last until 2024. The biggest reason being the equipment shortage at the moment, and it is very hard for equipment companies like ASML, like Lam Research, to kind of increase their capacity and kind of ramp that up, and that's right now what's being the bottleneck in the semiconductor shortage industry. And he doesn't believe much will change in the next few months because of the long time it takes for the increase of ramping, that this kind of shortage can happen till 2024. Another thing I do want to mention is the shortage, right? There might be a surplus in certain markets for semiconductors, but there are still shortages in other markets. A perfect example is the automotive market right now is still heavily hit by semiconductor shortages. If we take a quick look, Intel did recently report earnings and they shared a lot of great insights. The first thing that they're saying is, hey, they are focusing on improving their kind of manufacturing process a lot better, and they are delivering 5 nodes within the next 4 years. They've also entered numerous products. For example, the graphics market, they've entered with Arc. They've also seen great results of their Alder Lake, which is their 12th generation, the one we previously just saw being number 1 and number 4 in Newegg, I believe. They are expecting to start sampling their 13th generation Raptor Lake. Again, just great news all around for the company right now. But this is not a grower at the stage, right? Most recent revenue was 18.4 billion. That was down 1% year over year. Gross margins are down about 5.7 percentage points, and we can see earnings per share are down about 35%. Main reason is this is a company now using a lot of their money to kind of invest in their future plans, like better processors, like their manufacturing plan as well. We can see their client computing group segment was down 13% year over year due to lower revenue from Apple and also lower demand of consumer and education at the moment. But they see strong growth in data center. This was up 22% year over year, driven by strong demand of their Xeon most recent processor. They also showed other revenue segments. The network and edge group was up 23%. And in their emerging businesses, I really like all three. Mobileye was up a nice amount, up 5% year over year. Their Intel Foundry business is only a $283 million business at the moment, but that did grow 175% year over year, increased by automotive revenue. And we can see the automotive market is growing at strong levels. Then this is one of their, I want to say, newest markets that they're really showing, the accelerated computing. This is their graphics market. That was up 21% due to Alchemist and the recent kind of release of their GPUs. So things are definitely looking interesting for Intel. I don't know if this is probably a stock I'm buying yet, but it is one that I do believe has the potential to change things around. And it is priced right now as a company that is going to fail to some extent. But if they start showing some at least high single digit growth within the next year or two, this is one that I believe can provide great returns to investors. And even some at Northland Capital believe that Intel is on track to regain process leadership in this $100 billion foundry market. The final company I want to take a quick look at is Qualcomm. They did report earnings last week, and I just want to give a quick highlight. Right now, the stock is down about 0.32% as I am recording from its 52-week high. The stock is down about 23%. Qualcomm, I want to say, is one of those companies that is meant to be a phone company in the eyes of investors, but this is so much more than that. And I believe for that reason, it is sitting at very, very strong, attractive levels. If we take a quick look at their most recent revenue, they grew 41% year over year. I'm telling you, if you take a quick look at EV to EBITDA ratios or forward PE ratios to some other metrics for this company, this is not valued as the growth stock we're seeing right now. Net income is up 67% for this company. Diluted earnings per share also up 68% year over year. They saw strong growth in other markets. Handsets was up 56%. RF was up 28%. The automotive market, which is still super small, but it is still growing at 41%. Internet of Things, I do think things like robotics and automations are going to continue to do strong, and it's up 61% year over year. This is a company that is doing buybacks. They are increasing their overall annualized dividend payout, and they are hitting strong markets. They believe that their handsets will grow about 50% year over year in revenue, and they did announce strong design win pipeline for the automotive market. So I do think Qualcomm is one to kind of take a quick look at as well, one that I am personally buying because I believe valuation is sitting very attractive. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.